Good morning. It's 8:30, and emerging markets are weaker with China off 2.5%. Hang Seng, the worst performing market in the world this year, and a number of the core blue chip names in that part of the world are broken charts. In fact, some actually have even pushed through the 200 moving day. No specific new news, but more talk and more concerns about the strength of the bank lending in January, about the expectations of a rate hike coming over the Chinese New Year celebration, about some very large pension and related funds that are selling equities, is kind of the sales trading call this morning. You also have the dollar, which is taking another run at the 200 moving day this morning after the Obama administration mentioning they are looking to freeze budget spending for the next 3 years. Clearly deficit supportive, clearly dollar supportive. In the absence of any great news out of Greece today, in fact, you have Greek markets testing down again after some support yesterday as they raised a significant amount of 5-year debt in euros. You have a formula where you could see resources and commodities come under some pressure. So again, oil down 71 bips. That's 1%. Brent, which really is trapped between the 50 and the 200 averages. If you're looking at this technically, probably goes down to the 200. That's somewhere around 69 or about 5% from here. So we mentioned Asia, very weak trade. Other key markets in the region like South Korea, like Taiwan, broke their 100 moving day averages. Taiwan down 3.48%, the worst performer in the region, and a very, very difficult show. Bodes poorly also for some of the semiconductor and other tech names here in the U.S. Looking into Central Europe, Russia, which was down over 3% early this morning, is clawed back to being down 2.25%, but still very weak, and a market which had been outperforming to this point this year is giving ground. Into South Africa, down 94 bips, down 1.38 bips this morning, and a currency that's the weakest of the players across the board. But again, it's an FX trade this morning. It's a dollar trade as much as it is just weaker equities. On the headline news, things are quiet. I think people are watching both U.S. earnings and continued developments coming out of Europe and continuing developments coming out of Asia. And in the short run, the trend is down here, and you need to pick your spots. But 200 moving day averages are the baseline I think you can get most comfortable with. But if you're looking at some of the highest beta stocks and commodity names, I don't think today's your day to pick them up. Thanks.